Welcome back, everybody, to another episode from Coin and Capital. It's Chris here. On this channel, we bring you headlines, data, charts. We talk about it and we try. Today, we're going to talk about the recent price moves in Bitcoin. What's going on in the markets, why Bitcoin decided to drop from 123K down to 99,000. Is it cooked? Is the cycle over? 4 years is approaching. The bear market is coming. What do we do? Is it over? I haven't made any money. Guys, let's talk about it. I'm going to show you some headlines, discuss some people that are way smarter than me, what their thoughts are and what they're looking at. Also, I'll give you guys a sneak peek on what I'm building for traders, for people in Bitcoin, for people in crypto, to help them understand markets better. Let's get into it. Okay, off the rip, you guys have seen this chart before. It feels like it comes up every video, but Bitcoin weekly chart, let's talk about it. Where are we? Well, we just had an epic sell-off this week, first week of November. We ran all of these buy stops that stacked up nice and neat. From a technical perspective, these lows are what we consider low resistance liquidity. We ran through that into a discount array on the weekly. So let's talk about some theory. External liquidity into internal range liquidity. Next stop, external range liquidity, right? ICT Concepts 101. Markets move price from discount to premium and back again. We are in a discount of this bull market. The next step is to move price into a premium range. What that looks like, have to say 125 plus based on what I'm about to show you next. Now, why, apart from the technicals, did price come up here at 125,000 and liquidate everybody in the market down at 99? Let's talk about it. A quote from a very important podcast. I recommend all of you go listen to it. It was with Raoul Pal, and a guest of his on his show, The Journeyman. This quote: we had two major wins. We did this 9 billion liquidation for an OG. Why? Because the guy that was in touch with them trusted me, trusted Galaxy. We executed it well. We made fair money. Client was happy. So, what we need to understand, guys, was that this move over the last month and a half was a very specific group of people selling their Bitcoin. We did this 9 billion liquidation. $9 billion liquidation, guys. That is insane. Below, Bitwise Chief Investment Officer, Bitcoin's sideways phase signals the end of 1% allocations. Matt Hogan says Bitcoin's long stretch of sideways price isn't a red flag. It's the asset's silent IPO moment, signaling a shift toward larger institutional allocations and a maturing phase in its market evolution. Now, that quote from the podcast, this headline from an article, and this price action all conjoin on one major point. OGs, right? People who got into Bitcoin at like $1, $2, $50, below $100, where you could just buy like, I don't know, 20 plus Bitcoin in a clip, are selling now. Few reasons for that. One, there is liquidity in the markets now, right? Can you imagine selling $9 billion worth of Bitcoin like 5 years ago? There would be nobody there to take the other side of that trade, right? And the markets would implode. Horrible outcomes. 2, a friendly administration, right? It is no longer taboo to say you own Bitcoin. In fact, it's no longer taboo to sell your Bitcoin, right? Back to this silent IPO moment. What we're witnessing, right, even though it looks ugly, is a mass distribution of old Bitcoin. OGs are selling, so who is buying? Well, my friends, institutions are buying, right? Institutions are the people that have the capital needed, that $9 billion worth of capital and more, to take the other side of these OGs selling their coins. So here we have spot Bitcoin ETF on-chain holdings as percentage of Bitcoin supply. Now we know institutions take custody of their Bitcoin through these wrappers right now due to legality and policy, right? So this is a great proxy for showing institutional adoption. Realistically, what we can see all time, it's grown. It's done nothing but grow in a nice linear fashion, which means institutions are slowly absorbing all of this sell side pressure in Bitcoin. And below, let me move my head out of the way. Spot Bitcoin ETF volumes as share of total Bitcoin spot market volume. 7-day moving average for the month. This is very interesting because this has trended down through the month, even though Bitcoin's chart looks like this. However, spot Bitcoin ETF volume has trended down. What does that tell us? Institutions aren't the ones selling. They are not the major market participant here. OGs moving billions of dollars of old coins ready to sell, guys. IPO moment, redistribution. And the coolest thing is, guys, this redistribution of old coins is going into the hands. These coins are being put into the hands of people that will use the coins, that will give the coins utility. Now, what I'm showing you here is some alpha beta. Some alpha that I've been developing for you guys that is very much in its infancy. Now, if we remember, through some of these videos, I've shown what was a 2D snapshot of a model I've been working on known as the Bitcoin gravity well, which measures Bitcoin's utility as a collateral for loans, leverage in the financial system. And that 2D model, it was okay. It was okay. What we have here for us is something way better. Check this out. A 3D, fully interactive gravity well model. Now, back to my point. This redistribution is putting new coins into the hands of people that will give Bitcoin utility, that will use it as collateral. JP Morgan to allow Bitcoin, Ethereum as collateral. Bitcoin is pristine collateral. And we can measure it, guys, by the Bitcoin gravity well and what that does to price. Now, if we look at it from this way, we can see that there are some very distinct things to notice about the curvature of this model. There is a phase where we run this side of the curve and price impact isn't so abrupt and violent, and we have a short diffusion. On the other side, convexity spikes and price soars. Now, the cool thing about this model, we have some adjustable inputs. So as this distribution of new coins continues, more and more of the Bitcoin total supply will be pledged as collateral, right? And what that does is it shifts market regimes in Bitcoin's price action, right? We start to move up the slope, and then how much collateral is being built or utilized per Bitcoin, how fast is it moving through the system, will start to grow with it. How cool is that? So, first of all, as Bitcoin collateral rate, BCR, goes up, we shift from quick leveraged pulses, right, into a more scarcity grind, right? So it would look something like this, right? Notice on this side of the model, very low convexity, staircase, boom, 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 over the years or months. So what happens when the BCR goes up, the amount of Bitcoin's total supply is used as collateral, and that collateral is given velocity? Guys, we hit the apex slope, the highest convexity regimes. And that's when reflexivity, mania, euphoria kicks in, right? But we need both of these factors to move in conjunction, right? Because if BCR stays low and yet CV stays high, we get stuck along that convexity curve, putting us back into that leverage pulsing regime. So we need both of these factors to rise along with it, right? And that sends Bitcoin's price, guys, into the millions. So we can think of this IPO moment, this redistribution, as the next phase in Bitcoin's adoption and utilization as money and as pristine collateral in the system. So no, the cycle is not over. Bitcoin is not cooked. We, in fact, based on this model and others I've been working on, have way more room to go than many people are thinking. So, if you guys enjoy this video, drop a comment down below, leave a like, let me know what you think of the video. As always, hit that subscribe button. I'll catch you guys in the next one.